Hello traders, welcome back to the Forex Gig where we dive deep into the tool that can help you make smarter trading decisions. And in today's video, we are going to be talking about how to scalp gold in Forex, specifically focusing on the gold trading strategy can apply effectively within just 5 minutes. Gold is one of the most actively traded assets in the Forex market due to its high volatility and liquidity. This market is an excellent choice for scalpers who aim to profit from small price movements throughout the trading day. However, scalping gold successfully requires a clear and efficient strategy, precise entries and exit points, and developed risk management. In the next few minutes, you will learn exactly how to set your chart, identify profitable trade setups, and execute trades with confidence. You will discover the right indicators to use, how to identify key support and resistance levels, and how to manage your risks properly for consistent results. Make sure to watch this video until the end because each step builds upon the previous one. Missing any detail might affect your understanding of the powerful scalping method. So by the end of this video, you would have a clear understanding on how to scalp gold effectively in the Forex market, giving you a practical approach that you can start applying immediately. So let's get started. How do we scalp gold in the Forex market? Scalping gold in the forex is an art that requires real precision, discipline, and a clear understanding of market dynamics. In this session, I will guide you through each aspect of scalping gold efficiently, from setting up your chart environment to executing trade with confidence. We break this down by first of all understanding the gold scalping strategy, which involves taking advantage of small price movements on gold, typically 5 minutes or less. So we are going to switch to our 5 minute charts to make it a little bit easier for us to get these opportunities. Gold is an ideal asset for scalping because it has high volatility and liquidity. These characteristics shows traders can enter and exit the trade quickly while capturing small but frequent profits. However, gold scalping is not just without risk. It is fast-paced nature demand quick decision making, advanced technical skills and strict risk management. The goal is to capitalize on short-term price fluctuations while minimizing potential losses. Now let's set up your trading environment. We dive into the strategy, we will use the right tools to set up our trading environment. You first of all start with a reliable broker. You will ensure that your broker offers a tight spread and low commissions on gold trading. Look for an advanced platform such as the MT4 or MT5 that support advanced charting tools and fast order execution. The right time frame to set up for this strategy is your 5 minute chart for scalpers, complemented with a higher time frame of either your 1 hour or your 4 hours to analyze the overall trend of the market. The indicators we can use are our moving average, which is set to our 20 moving average and our 50 moving average. This is one of the indicators we will use to analyze the overall trend of the market. We would also make use of our RSI. Our RSI indicator is an essential tool that we can use in scalping gold. Sorry, we'll use our stochastic RSI, not just our RSI. Our stochastic RSI indicator is what we'll use in this strategy. The next indicator we would use is our MACD. Our moving average divergence and convergence and divergence is another indicator we would use to capitalize on this strategy. First of all, we start by analyzing the overall trend on the higher time frame. So if I go to my 1 hour chart and I spot the overall trend, now looking at this area in the market, I would look at when the market is in an uptrend, and as we can see at this area in the market, price is trending to the upside. From the chart, as we can see, is trending to the upside. This is the first step we need when trying to analyze our pair. It's trending to the upside. Now let me try to cut this out so that we can apply this in real time. So market is trending to the upside. If price is consistently above our our simple moving average, it means that we are in an uptrend, and as we can see in this area, price is trading above the simple moving average, the 50 moving average. You can see this signifies that we are in an uptrend. If price is below the simple moving average, it means that we are in a downtrend. First of all, we have to draw our key support and resistance level on the chart, and drawing this requires experience. You just draw support levels are the previous lows in an uptrend, while resistance level are previous highs in an uptrend. So this is basically what we are drawing in our chart. If you go far back in time, you can still be able to draw support and resistance levels on your chart. They are not just levels, they are zones where price might respect in the future. Now the support levels area is where price tends to bounce upward. When price breaks through this resistance point and it turns to a support, these are areas where price reverse to the upside, while resistance levels are areas where price come in and reverse to the downside. How do we enter? After this top down analysis from the higher time frame, we will enter our lower time frame to get a better entry at where we want to enter in current price. Remember that the market analysis is very important, and as we can see from this 1 hour time frame, we have deduced that the market is in an uptrend, signaling that even our moving average price is trading above it. So we have gotten to an area of support in the market. Then I will switch to my 5 minutes time frame to get a good entry and exit point. Now in my 5 minutes time frame, I can see that this is an area where price has gotten to that support region. We have to trade in such a way that price would align with the stochastic indicator, our MACD indicator, and our trend lines. First of all, for our entry, we have to align with the indicator. Our stochastic RSI shows an oversold condition near the support region. As you can see, we are in the support region. This is the support area. We look at our RSI, our stochastic RSI, and we can see that price is in the oversold region. This is below 20, and we can see a crossover. When we see a crossover, this signals that we can buy in the market. Coupled with our MACD, we can wait for our MACD to cross over before we decide to enter a bullish market. After we have seen a crossover on our stochastic RSI, we can see a crossover happening presently on our RSI, and we can also see from the price action that there is a bullish engulfing pattern. This signals for us to enter our long position at that area. Remember, stop loss placement is really important. But first of all, let's get how we would enter this position. We would also confirm the MACD crossover, and we have seen that the stochastic RSI is leaving its oversold zone. Remember, your stop loss should be placed just below this previous swing low in terms of a buy trade. When it's a sell trade, it has to be just above the recent swing high. We set our profit target to at least the next resistance area, and this is the next resistance area in chart, the next swing high in present market trading area. This is the next swing high. As we can see, marked this from our time frame. This is the next swing high. We can set that area to be our area to exit the market. So when we enter this trade and set our take profit to that area, we allow the trade to run. Remember, managing your trade is very important. You would have to always use a good position sizing. Never risk more than 1 to 2% of your trading capital on a trade. You have to limit your trading per 1% or 2% in any single trade. Remember, use a moderate level of leverage when trying to take a trade on your account, because of we have to avoid magnifying our losses excessively during volatile period. Remember, stop loss discipline. Always set a strict stop loss order immediately after entering a trade to cap potential losses. This will help you to minimize your losses when trading in using this our strategy. There are other tips we need to avoid. We also need to avoid over trading. Always stick to the high probability setup. Remember, you have to see both confirmations from your stochastic RSI to your MACD before you confirm any trading setup. So when you confirm this, you need additional tips when scalping gold. You have to avoid trading during news events. You have to avoid trading during high news events. You have to also monitor the economic indicators. You always keep an eye for the US dollar strength, and you also look and keep an eye for the interest rates that could heavily influence gold price. You will also practice this strategy first on a demo account before applying this to a live chart. Remember, practice makes perfect. By following these few steps, you would maintain discipline in scalping your gold effectively in your forex trading while managing your risks effectively. So this is basically how we have capitalized on trading our gold strategy. Alright traders, we have come to the end of this video. If you found this video helpful, do not forget to like, share and subscribe to our channel. Always turn on your notification bell so that you will never miss out on more trading tips and strategies. Thank you for watching, and I will see you in the next video.